All right, ladies and gentlemen, we're back at it again, bringing you a brand new video. And in this video, we are going to be backtesting a very simple methodology out there, kind of like an easy trade setup that anybody can use, just to see whether or not it is profitable. Okay, we're going to be using the Bollinger Band indicator as well as in correlation with stochastics indicator. Okay, so we're going to be waiting for prices to breach the bottom of the Bollinger Band, as well as wait for the stochastics to be in correlation of oversold, and we're going to wait for the crossover of the stochastics. I will go through a quick trade just so you guys kind of get the idea of what's going on. And then I'm going to do a 20-30 trade backtest review and kind of talk about ease of use. Do I recommend it? Is it profitable or not? And so on and so on. So quick kind of thing is, say this is price going up, right? And we have a Bollinger Band up here. We got the middle one kind of cutting through, and then we got the bottom of the Bollinger Band, and then we got the stochastics down here. So what I want to see is, say for example, price breaches above it, and then that will be an indication of me having one thing I want to see. The other thing that I want to see is have this stochastics overbought, and I want to see it beginning to turn, the crossing over of the moving average. And then once it crosses, I will be pushing sell. I'm just going to place my stop loss above kind of the previous candlesticks. And if I'm buying, I'm going to be placing it below. So if I'm buying, it's going to be the exact same thing. I'm just going to be, say that's our Bollinger Band, that's the bottom, that's the top, waiting for price to touch the bottom of it, kind of break through it a little bit, and then wait for my stochastics to hit the upper range, and then wait for it to cross over the two lines. I'll give you a quick trade example so you guys understand, then we'll go through 20 or 30. Then I'll report back to you guys. Okay? Pretty simple. Correlation, waiting for the Bollinger Band to be overbought, stochastics overbought as well, waiting for it to break through. Just kind of waiting for two things and placing my stop right above. Risk to reward, we are going to go with 2-to-1. Okay, it's always nice to make more when you trade, so that's what we're going to be going with, and then we'll do a review at the end. I have done a couple of these before, more so on the supply and demand methodology. So if you go to my YouTube channel, you could see the backtesting supply and demand system. I've done that one, as well as the new trading setup of supply and demand that I now trade. So I will put those in the description below. If there's anything that you guys would like to see me review or backtest with any ideas, candlestick patterns, chart analysis, or whatever, you let me know in the comments below, and I will maybe do a backtesting video on it and just kind of review it, see do I recommend it, what are my thoughts, and so on and so on. Okay, so let's go through a trade example. So I'm going to be using the daily time frame on the Euro USD. I have about 10 years of data. We are going back to 2015, so about 7-8 more years until we hit up current what's going on in the world right now of 2022. So let's just find a quick trade example. Next bar, next bar. So ideally, this is what I want to see. I want to see prices, piercing through it a little bit at the bottom of the Bollinger Band right here. I want to see the stochastics oversold, and I'm waiting for this blue line over here. I'm not sure if you guys can see it. I'm waiting for it to cross over the red dotted line, and then once that happens, I will push buy, and then I will go for a 2-to-1 no matter what. I'm not going to move my stop loss. I'm not going to move my take profits. These are all things that you could do to potentially make the strategy better or worse, but we're just going to go pretty simple, so every trade is the exact same. Okay, so it's breaking through. That's what I like to see, waiting for it to turn. Okay, so that is my first indication of, hey, prices are beginning to turn. It's kind of broke through it a little bit. Blue is just beginning to go above it. So I'm going to place a visual mode buy limit. Oh, nope. Percentage visual mode buy stop, just so I get filled when if price do take off. And then I will place my 2-to-1 right there. Okay, accept, next bar. Okay, first trade's a winner. That's awesome. So I'm going to go through 20-30 trades and report back to you guys, talk about the results, and so on. So I'll just speed up the whole process. Let's get into it. Okay, we finished the back test. Let's see how many trades we got. Overall, 8.45% out of how many trades? Closed history. How do I blow this up? Statistics. So let's look at the stats on this. When trading in correlation, when price is touching, or what I was doing was kind of breaking above the Bollinger Band, and the stochastics was overbought and it was beginning to turn, crossing the moving average. Those were the two confirmations I needed. And now in total, how many trades? Wow, 54? Wow, I actually took 54 trades. So I meant to take like maximum 20, 30. It was happening so quick. So number of closed trades, 54. Profitable trades, 21. Losing trades, 33. So let's bring out the calculator. 21 plus 33 equals, well, 54, of course. Let's do 21 divided by 54 equals a 38% win rate. Okay, so with a 2-to-1 risk to reward, we had a 38% win rate. Not bad. All right, going for a 2-to-1, expect to win maybe 38, 40% of your trades. Now, personally, when it comes to back testing, I always say minus a couple percentage, because you can kind of cherry pick when it comes to back testing in the live markets. There's real emotions here. It's completely just back testing. So overall with this, when I was trading in correlation, just a quick recap with this. Let's actually just look at the last trade I took, and I'll give you my final thoughts on this. I would buy down in here when prices were breaking the bottom of the Bollinger Band, and then I would wait for down here. You will start to see that the stochastics is crossing over one another. So I would wait for that to cross over and make sure that the Bollinger Band is breaking through, that price is breaking through the Bollinger Band. Those are my two things. If I don't have both of them, then it's no trade. If I only have one out of two, then it's no trade. Same thing for selling, okay? I need to see price breaking above it, and then I need to see prices beginning to turn from the stochastic saying, hey, it's oversold. So we have two oversold indicators in my favor. And so that's really what I was trying to do. Overall, 54 trades. We'll try to keep it to 50 next time. Profitable trades, 21. Losing trades, 33. 21 divided by 54 equals a 54%, or sorry, a 38% win rate. Not bad, it's totally manageable. Every time you take a trade, you got 2-to-1 risk to reward out, 38% of the time that you'll win money. Overall, plus 8.45%. I went through about 7-8 years of data. It's nice if you can have more pairs as well. So yeah, I think it is slightly positive, slightly profitable. So my overall conclusion when it comes to would I recommend this, what is the percentage of ease of use, profitability factor and all that, what would I give it? I would give it ease of use. Let's just do EAS. I would give it out of 3. I would personally give it a 3 out of 3. I think it's 100% possible. Very easy. 2 simple rules you got to follow. I didn't give a crap about news. I didn't give a crap about anything. All I needed to see those 2 things. Very simple. Now, is it worth your time in actually continuing to trade it or add it to your trading methodology? Uh, I think there's better things out there. I think you could slightly tweak the rules, in my opinion, maybe to find better trade setups. It could make the trading system better. It could make it worse. Now, when it comes to profitable, over the long term, yes, I think it is profitable, slightly above. But like I said, I think you could probably tweak some things. Is it worth your time, or should you go off and trade a different strategy? In my opinion, you probably should. But out of a 3, I would personally give it a 1. That's personally what I would rank it. Okay. If you guys would like the backtesting software, I will put that down below in the description. Soft4FX, it's my affiliate link. Strongly recommend it. Continue to backtest over and over again, creating a better edge for yourself, seeing what's working, what's not working. If there's any ideas that you guys want me to review, we can see here how many long trades, how many short trades. Short trades 1, long trades 1s. What was the most amount of wins I had? What was the most amount of losses? There's like pictures, stats, graphs that you can pull up and all that stuff. So a lot of cool things that you can bring up from this backtesting software, Soft4FX. I will put that in the description below. If you have any questions, or if you want me to do this again with trading a different system, let me know, and we'll end it here. All right, if you guys want to reach out to me on social media at MoneyballAustin, Twitter, Instagram, Facebook, and if you want to get that free training of the supply and demand course or watch those other videos, go to moneyballtrading.com. and take the free training there. And if you want to see that supply and demand back testing of what I had, then recommend you check it out here. 67% win rate, solid. And I also did like a more in-depth one of 34 minutes. Okay, so I'm gonna let you go. Have a good one. Appreciate if you guys like this video. Hit that like button, comment, subscribe, and I'll see you in the next one. Bye-bye.